We're going to go through the basics of how the product's going to work now. And if any of this is new to anybody online now or watching, please reach out to us, support@cashbox.global. We'd gladly take you through deeper training if that's what you require. But the salient features and points, we have Goldman Sachs who are underwriting, really strong European bank, as we know, well rated, and from an insurance and from our research point of view, a wonderful bank to work with. This is a guaranteed coupon, which is really wonderful. We haven't seen a fixed income, certainly at this level before. And it also has a descending order call, which is the first time we've seen this as well. So a fixed interest or income at 3.38% per quarter, and again on a specific date program, which we'll have a look at in a second. This has a maximum period of 4 years. We'll explain and understand why this could mature earlier, and there's a strong potential for that. We don't have an income trigger in that, in this particular product, meaning the coupons are going to flow. It doesn't matter where the underlyings are trading at the moment. And it'll continue to pay out until final maturity or early maturity. Let's have a look at how that's going to work. So the order call is going to work on a reducing basis. It's going to remain at 100% for the first 18 months. So the shortest period this product can run is 18 months. And then for every quarter thereafter, or from that 18-month observation and every quarter thereafter, the order call is going to be possible, and it's going to reduce by 2% every quarter. We'll take you through a graph or a picture to show you what that means. The reference basket, as Andrew's taken us through, global headquarters and diversified around the world, wonderful companies that we've known for a long time. So the capital protection that's also put into the product is set at 60%. So what does that mean? If the product happened to run to full term, as long as the lowest share in this particular reference basket has not dropped by more than 40%, then our full capital will come out. We would have received all the income flows plus our capital out at the end of the product. The availability, in this case, we're closing out on the 22nd of May. Please, if you are interested, please come in a lot earlier, as the gents have expressed. Goldman's close the vault, if you like, and shut the product down on the defined closing date. So let's please be in early. It is a US dollar denominated product with a minimum investment of $10,000 or any round thousand above that from there on. So Jill, if we can go to the next slide, please. Our favorite slide, of course, and why fixed incomes are always great, is on that payment date, the 10th of September, the bank would then transfer the income coupon directly from the bank to your trading account. As everybody knows, Cashbox doesn't manage or touch any of the cash. It's directly between the investment bank and your trading account or your online brokerage. So the auto call is not available for the first period of time. By the 8th of December, the auto call trigger starts at 100%, and from every quarter thereafter reduces by 2%, right the way down to the end of the life of the product, making it easier and easier to auto call. As everybody knows, we love an auto call because it gives us the opportunity to reassess the market at that point in time, and then decide what we'd like to do with our capital. Perhaps it's a new opportunity, and off we go at that point in time. So great product if we're looking for streams of income with a defined payment date. Thanks, Joel. So there's our step down. We're going to run for the first 18 months at observation number 6 at 100%. So as Andrew said, these shares do not need to grow in order to have produced an income, which makes structured notes, and particularly income-producing structured notes, so marvelous. We don't need growth to create an income. We just need steady stocks in our basket. And even if these started to come down over time, the order call becomes easier and easier, almost like a staircase, till eventually the the shares are at the price that we need for an auto call. And we run all the way down to capital protection barrier at 60%. So all in all, a wonderful structure here, gents. Thank you. Thanks, Jill. So just as a summary, maximum 4 years, minimum 18 months, fixed coupon, irrespective of the performance of the underlyings. We will auto call early if we do get over the auto call trigger, and we've got the descending 2%. So if we do mature early, full capital is returned on the payment date back to our trading accounts from the investment bank Goldman's. And as long as by the final observation, the shares are not, any one of the shares has not dropped by more than 40%, meaning 60% of the start price, your full capital is returned. And the risk is if any one has dropped below the 60% capital protection barrier, we'd get our cash back as if we owned that share. So if it had dropped, let's say, to 55%, we'd get 55% of our capital out. So the risks are always then, who's the bank? Do we believe in them? Do we believe in the underlying shares? How likely are they to get to these levels? And if it does get to this level, am I happy with the protection that's built in at that particular point? I think that would be it.